Well, on one side, you've got Apple posting these just unbelievable financial numbers, shattering expectations, looking almost unstoppable.
Okay.
But then on the other side, they're facing this rising tide of, political heat, regulatory pressure, ethical questions,
Yeah.
things that really threaten their whole way of doing business globally.
Right. It's kind of push and pull. So let's try and unpack that. We've looked at a whole range of sources for you today, and they really paint this complicated picture. You've got this corporate behemoth setting financial records, while at the same time, it's fighting tooth and nail in courtrooms and government offices all over the world just to defend its basic business model.
Exactly.
So our mission today for you listening is to try and deliver a clear, sort of multifaceted view of Apple Inc. right now. We'll cover their biggest revenue growth in years, their big AI strategy.
Which is crucial.
Yeah, absolutely. How they're navigating some really high-stakes political compliance and, well, frankly, some pretty deep and persistent ethical criticisms that are challenging that shiny Apple image.
And if you need just one fact, to frame this whole thing,
Go on.
Apple just booked its largest quarterly revenue growth since way back in December 2021. Overall revenue jumped 10% year over year. That's the starting point for everything else we'll discuss.
10%. For a company that big, that mature, I mean, in this economy, that's almost unheard of.
It really is.
You'd expect maybe mid-single digits, right? Struggling to expand. But these Q3 2025 earnings, they just suggest that financial engine is running hotter than it has in a long time. So let's start right there. The money.
Absolutely. So the results for the quarter ending June 28, 2025. They didn't just meet what Wall Street was expecting for profit and revenue. They smashed it. A decisive beat right across the board.
Okay, give us the specifics then. How big was this win? What was the gap between the forecast and what they actually delivered?
It was pretty substantial. Earnings per share, EPS, that came in at $1.57.
Okay.
The expectation was $1.43, so a good jump there. Total revenue hit $94.04 billion.
Wow.
Significantly higher than the $89.53 billion analysts were looking for. And the bottom line, the net income, that surged to $24.43 billion.
$24 billion.
Up from $21.45 billion this time last year. So that's like a 14% jump in quarterly profit. It shows not just volume, but real margin power too.
It's just astonishing. And it's a good reminder, isn't it, that despite all the talk about services and diversification, the iPhone, it's still the absolute core powerhouse of this company.
Oh, absolutely.
How did the iPhone specifically drive that growth?
It was just a monster quarter for iPhone. Sales grew 13% year over year. That brought in $44.58 billion.
Okay, and analysts were expecting?
Only about $40.22 billion. So that's nearly a $4 billion beat just on the iPhone. Yeah. That was critical. And Tim Cook, the CEO, he credited this to the iPhone 16 performing in, his words, strong double digits. Better than the iPhone 15 models did at the same point last year.
Strong double digits better. And who's buying them? Is it new people coming to Apple, or is it something else driving that performance?
The sources are pretty clear on this. The growth was fundamentally driven by current iPhone users upgrading.
Ah, loyalty.
Exactly. Incredible user loyalty. And it shows the success of their strategy, right? The staggered releases, this sort of feature drip approach. It convinces existing users that those incremental updates are worth the money year after year. It really speaks to how sticky that ecosystem is.
Okay, so the iPhone's firing on all cylinders, but the real surprise package maybe wasn't the iPhone this time. It was the Mac.
Yes.
I mean, for years we've talked about the Mac business as, stable, mature, but maybe not exciting growth-wise this quarter. Fastest growth of any unit.
That, for me, is the most exciting internal story. The Mac business saw nearly 15% growth. 15%. It hit $8.05 billion in revenue.
Right.
And this isn't just a blip, It feels like part of this multi-year revival that's been driven by their big shift to Apple's own silicon, the M-series chips.
Can you break that down quickly? Why are these M-series chips so revolutionary that they're causing a 15% jump in Mac sales? What's the magic there?
Sure. It's more than just speed, though they are fast. The key is the architecture. They use something called unified memory, which basically means the CPU and the GPU, the main processor and the graphics processor, can share memory much more efficiently and quickly. It delivers really high performance, but uses way less power.
Ah, efficiency. Crucial for laptops.
Exactly.
Yeah.
Especially for things like the MacBook Air. And they updated the MacBook Air right before this quarter started. So that update, leveraging that efficiency and power, it's clearly driving demand from people who maybe held on to their older Intel-based MacBooks for a long time.
Okay, so you've got the core product, the iPhone, doing brilliantly. You've got the traditional computer line, the Mac, having this amazing revival. And then you layer on top of that the recurring revenue machine, services.
Services, yeah. That's the bedrock, really, for their long-term, stable valuation. It just keeps growing.
So what's included in services again?
It's everything from, iCloud storage, Apple TV, plus Drip, use Apple Music, all those content subscriptions, plus the commissions from the App Store, which are hugely profitable.
Right.
And that whole segment continued its high growth, up 13% to $27.42 billion.
$27 billion.
Yeah. And Cook specifically highlighted iCloud subscriptions in the App Store for seeing double-digit growth within that.
And the beauty of services isn't just the growth rate, it's the profitability, the margins, right?
Exactly right. The margins on services are just exponentially higher than on hardware. So that $27.42 billion, it's critical because it's predictable income, it's high margin income, and it stabilizes the company against those unavoidable dips in hardware sales cycles.
It basically prints money.
Pretty much. It guarantees they have that steady cash flow for big strategic bets, or, like we'll discuss later, for navigating tricky political situations.
Okay, so iPhone, strong. Mac, surprisingly strong. Services, reliably strong. Where were the weak spots? Because even Apple can't win everywhere.
No, absolutely not. They definitely saw some tough spots. Two divisions actually declined. iPad revenue dropped 8% to $6.58 billion.
Even though they launched a cheaper model.
Yeah, despite launching a low-cost iPad back in March, which you'd think would boost demand, didn't quite work out that way this quarter. And maybe more notably, the other products division.
That's the wearables. Watch, AirPods.
That's right. That includes the Apple Watch, AirPods, HomePods, things like that. That division declined 8.64% to $7.4 billion.
Almost 9% down for wearables. That's more than just a weak spot, isn't it? That feels like maybe a signal the market's getting saturated. Or maybe consumers are just waiting for the next big thing in that space.
It definitely raises a big question. If Apple can't keep innovating really rapidly in those non-core product lines, how do they keep justifying the premium prices? The wearables market is super competitive now, much more than it used to be. And an almost 9% decline suggests maybe their lead isn't quite as untouchable as they thought.
Okay. One more area on the financials, China. This has been a bit of a headache for them recently, right? Declining sales.
It had been, yeah, for a couple of quarters.
But this time, the sources show a major turnaround.
A really significant reversal, actually. And it was crucial for hitting that overall $94 billion revenue number. Greater China sales rose 4% year over year to $15.37 billion.
$15 billion.
And that reverses declines at 2% and then 11% in the two previous quarters. So a big swing back. And Tim Cook specifically pointed to a Chinese government subsidy for certain devices. He said it clearly helped their performance in China.
Okay. So there it is again. That direct link between financial success and, well, politics and government relations.
Precisely. A strategic subsidy from Beijing translates directly into billions in revenue for Apple.
It really shows how, in today's global economy, the CFO's office and the government relations team have to be working hand in glove.
Absolutely. The health of the balance sheet is directly tied to navigating these incredibly complex political landscapes, especially in huge markets like China. #Tech3, strategy, tariffs, and the AI investment push.
And those global political and economic realities, they lead us straight into the next big topic, the sheer cost of doing business globally, especially with things like the U.S. tariffs on Chinese goods.
Yeah, and we have some specific numbers here that really bring those trade tensions down to dollars and cents, or rather hundreds of millions of dollars.
Okay.
In the June quarter alone, just Q3, Apple incurred $800 million in tariff costs.
$800 million. Just poof. Gone to tariffs.
Exactly. Now, interestingly, that was actually a bit lower than the $900 million they had estimated.
Small comfort, maybe.
Right. But it's still an astronomical amount of money just diverted to deal with trade policy. It's not R&D, it's not marketing, it's just tariff cost.
And that cost isn't staying flat, is it? Cook gave a projection for next quarter, Q4. That's even worse.
Yeah, he did. For the September quarter, Q4, assuming nothing changes in trade policy, Cook expects those tariff costs could jump to about $1.1 billion.
$1.1 billion.
So the takeaway is clear. This huge, unavoidable financial burden is now just a core part of Apple's operating expenses. Their profit margins are directly linked to the geopolitical temperature between the U.S. and China. It's a very expensive new form of risk management.
And Cook also mentioned something interesting, that this unstable tariff environment actually created a bit of artificial growth this quarter, a sort of revenue mirage.
Yeah, he called it the pre-buy effect.
Okay.
Cook estimated that about 1 percentage point out of their overall 10% revenue growth could be attributed to customers or maybe resellers buying products ahead of potential future tariff hikes.
So stocking up just in case prices go up later.
Exactly. So a slice of that impressive 10% growth wasn't purely organic demand. It was people pulling purchases forward to avoid potentially higher costs down the line.
Okay, so tariffs are this massive headwind, complicating the financial picture. But the company is clearly placing a huge bet on the next big wave, artificial intelligence.
Oh, absolutely.
Even though apparently some investors were a bit underwhelmed by their initial AI announcements at the Worldwide Developers Conference, WWDC.
Yeah, the reaction was maybe a bit muted initially, but Apple is signaling they are all in. They see AI as existential, frankly, and maybe they feel they need to catch up, at least in public perception, to some competitors.
So what's the message from Cook?
He stated it very plainly. AI is, quote, one of the most profound technologies of our lifetime.
Oh, okay, strong words.
And their strategy isn't about creating one single flashy AI product. It's about embedding it everywhere. They're significantly growing their AI investments, and the plan is to weave it across our devices, across our platforms, and across the company.
That sounds much more foundational, doesn't it? Like a platform level shift, not just adding a slightly better photo filter or something.
Exactly. It's systemic. And they're backing this up with acquisitions, too. Targeted ones.
Right. You mentioned M&A. What's the approach there?
Well, Cook said they remain open to M&A that accelerates our roadmap. They've already acquired around 7 companies just this year.
7 already?
Yeah, though apparently none were huge billion-dollar deals. More like smaller, talent-focused acquisitions, acquiring teams and specific technologies.
But the potential's there for something bigger, right? Given their cash pile.
It's immense potential. We noted earlier they have a staggering $133 billion in cash just sitting there.
$133 billion.
So if the right major AI target comes along, they have the war chest to make a truly transformative acquisition almost overnight.
It does make you wonder, though. With all these new types of devices emerging, specialized AI gadgets like the Humane Pin or various smart glasses, are they going to threaten the dominance of the smartphone, the device that, brings in half of Apple's revenue?
Yeah, that's the billion-dollar question, isn't it?
What's the official Apple view on that competitive threat?
Cook was incredibly bullish on the iPhone's future, maybe even a little dismissive of the threat from these new devices. He basically said he believes emerging AI devices are likely to be complements to the iPhone, not replacements.
Complements, not replacements.
Yeah. He explicitly stated it's, quote, difficult to see a world where iPhone is not living in it. It really reinforces this idea that, internally at least, they still see the iPhone as the indispensable hub for everything we do digitally for the next decade.
But hang on, aren't some of these new devices, like that AI pin, specifically designed to get rid of the screen? To break that dependency the iPhone thrives on? Are we being a bit too quick to accept Cook's optimism given how fast AI is moving?
That's a fair challenge. It's a huge gamble they're taking. Apple is essentially betting that our fundamental human desire for a versatile, multi-use screen will always win out over these more niche, dedicated AI gadgets. If a competitor manages to create a truly seamless, maybe voice-driven or hands-free interface that replaces a lot of routine phone tasks, well, then Cook's statement could look pretty naive in a few years.
So the challenge for Apple is?
The challenge is to integrate AI features into the iPhone that are so useful, so indispensable, that they not only justify the next upgrade, but also make the iPhone the best way to access AI, rather than just one way among many, #handcheck-IV, navigating political and regulatory pressure points.
Way.
Okay, so now we shift gears a bit from the high-flying financials and the future AI strategy to the much, much trickier territory of political compliance and regulatory pressure. This is where that paradox of Apple's power really comes into sharp focus.
Right. And there's probably no better or maybe more controversial recent example of that than their decision to remove the Ice Block app. This app had over 1 million users, right? And its removal wasn't just some technical glitch or policy violation. This was the U.S. government directly intervening in the App Store.
Yeah, this was Apple making a very strategic, very high-stakes political calculation, arguably designed to appease some powerful interests here in the U.S.
So remind us, What did the app do?
It basically alerted users to nearby sightings of Immigration and Customs Enforcement agents, ICE agents. The U.S. Department of Justice, the DOJ, formally requested Apple remove it.
And their argument was?
The DOJ argued the app endangers law enforcement officers and helps undocumented immigrants evade detention. They specifically mentioned violence against law enforcement, calling it an intolerable red line.
But the app's creator, Joshua Aaron, he had a defense, right? He said it was just information, like ways for traffic jams or police speed traps.
That was his argument, exactly. Aaron insisted it was purely for notification and information sharing. He even said the app explicitly warned users not to incite violence or interfere with officers.
But Apple pulled it anyway.
But they did. They cited safety risks that violated their App Store guidelines. And crucially, they said this was based on information provided by law enforcement.
Okay, but the sources we looked at suggest this wasn't just an isolated incident. It might have been part of a larger pattern, right? A pattern of Apple trying to align itself with the Trump administration's priorities, maybe to help with those tariff issues we talked about.
Precisely. That's the context provided. This specific app removal is seen by some observers as one piece of a larger puzzle. Other pieces include Apple shifting some manufacturing, investing billions in its U.S. supply chain, all moves potentially aimed at mitigating those tariff costs and building goodwill with the administration.
And there was a specific incident that maybe heightened the pressure.
Yes. The FBI had recently labeled an incident in Dallas where ICE officers were targeted and where tracking apps were reportedly used as a terrorist attack. That created immense political pressure on Apple to act quickly on the DOJ's request. They had to balance their public image as an open platform against the very real financial need for smooth relations with the government imposing those tariffs.
Okay, let's shift from domestic U.S. politics to global privacy. There's this huge ongoing battle over end-to-end encryption. And the situation with the U.K. seems particularly serious. This feels like a fundamental challenge to Apple's core security promises.
It is absolutely critical because it strikes at the heart of the security architecture Apple has built its reputation on. Back in December, the UK government issued a formal notice.
Under what authority?
Under their Investigatory Powers Act, or IPA. It's a pretty controversial law. And this notice demanded that Apple provide access to the encrypted data of its users globally, not just UK users, global users. Essentially, they wanted a backdoor.
A backdoor into encrypted data. What does the IPA actually allow the UK government to do? Why would they think they can demand that from a US company?
Well, the IPA gives the UK government very broad powers to compel companies operating within the UK, which Apple obviously does, to weaken their security features if needed for surveillance or investigations. The specific target here was data protected by Apple's most secure system, called Advanced Data Protection, or ADP.
And ADP is designed so that even Apple themselves can't read that data, correct?
That's the whole point of it. Data under ADP is encrypted using keys controlled only by the user so thoroughly that Apple literally cannot access it. To comply with the UK's demand, Apple would have had to fundamentally re-engineer their entire global security system to create some kind of master key or deliberate weakness.
So what did Apple do?
Their response was pretty swift and decisive. They basically said no. They withdrew ADP features from being available to users in the UK entirely, and they launched a legal challenge against the government's notice. They made it very clear they would not build a security vulnerability into their system.
And that pushback seems to have worked, at least for now.
It appears so. The U.S. Director of National Intelligence later claimed that the U.K. had actually withdrawn the demand.
Interesting that the U.S. intelligence chief announced it.
Right. And the DNI specifically noted that the U.K.'s demand would have, quote, enabled access to the protected encrypted data of American citizens, framing it as an international security issue, not just a U.K. matter.
But privacy groups aren't exactly celebrating, are they?
No, they're very cautious. Groups like Liberty in the UK called the original demand a reckless and potentially unlawful move. They argue it threatened both personal privacy and even national security by potentially weakening encryption for everyone. And they stress that the underlying power for the UK government to make such a demand still exists in that IPA law. It hasn't gone away.
Okay, so beyond these direct government demands, Apple is almost constantly involved in legal battles over its sheer market power and its intellectual property. Let's talk about the antitrust landscape and these accusations of IP aggression.
Yeah, antitrust pressure is definitely heating up significantly. You have the landmark lawsuit filed by the U.S. Department of Justice in 2024.
Right.
The DOJ is alleging Apple maintains an illegal monopoly with the iPhone. And importantly, the language they used was really strong. They compared Apple's tactics to, quote, even more egregious violations than what Microsoft was accused of in the famous US v. Microsoft case back in the day.
Wow, more egregious than Microsoft. That's a high bar.
It suggests that the DOJ thinks Apple's control over its ecosystem is even tighter and more harmful to competition.
And this isn't the first time they've faced accusations of anti-competitive behavior, even against their own potential employees, right? That no poaching case.
That's a really important piece of history here. You're right. Apple settled a big class action lawsuit back in 2015 for $415 million.
$400 million?
Yeah. That lawsuit alleged that Apple and several other big tech companies had these secret agreements not to recruit each other's employees. The effect, the lawsuit claimed, was to illegally suppress wages and limit job mobility for thousands of skilled tech workers.
So it shows a potential pattern, doesn't it? Anti-competitive actions aimed at consumers through the App Store monopoly, and also aimed at workers through things like no poaching agreements.
Exactly. It paints a picture of a company potentially using its power against multiple groups.
But it's the stories about their intellectual property enforcement, their IP aggression. Some of the targets seem almost comical if it wasn't so serious for the people involved.
Yeah, this is where critics really talk about bullying tactics and corporate overreach. Apple's legal team has gone after trademarks held by some incredibly small entities.
Like what? Give us some examples.
Okay, sources mention they opposed a trademark for a school district logo in Wisconsin. It apparently had 3 interlocking apples.
A school district?
No. They went after a small Canadian podcast called Talk About Apples, and they even objected to a logo used by Woolworths supermarkets in Australia because it vaguely resembled an apple.
Woolworths, the supermarket chain.
That's right. Critics have called these actions just lunacy. They argue it goes way beyond reasonably defending their trademark and becomes this kind of aggressive corporate intimidation.
But what's the goal? Why go after a school district? It seems like bad PR, if nothing else.
Well, the goal might not be to win every single one of these cases in court. It might be more about creating a chilling effect.
Scaring people off.
Exactly. Small companies or organizations facing a legal threat from Apple, with its basically unlimited resources, they often can't afford to fight. They might just give up the trademark or spend huge amounts on legal fees they can't afford. Some competitors told the U.S. Congress this kind of behavior just drives them out of business. It ensures that anything even remotely looking like their logo or using similar terminology gets stamped out early, consolidating their brand dominance through sheer financial muscle.
Okay, and then finally, under this regulatory umbrella, there's the whole issue of ecosystem control, the vendor lock-in criticism. This affects pretty much every single person who buys an Apple device.
Yeah, this is about Apple's total control over the user experience, especially after you've bought the product. One big criticism is their use of proprietary parts.
Making it hard to repair things yourself.
Exactly. Critics say they actively design things to thwart self-repair or repairs by independent shops. If your screen breaks or your battery dies, they funnel you back to Apple's own, often more expensive repair services.
The right to repair issue.
Precisely. And then there's the control over the software and content ecosystems, primarily the App Store. Apple unilaterally sets the rules, the commission rates, that controversial 30% cut, and the pricing policies for every app developer who wants to reach iPhone users. That gives them immense centralized power over a massive digital marketplace. #tag fee, the environmental and ethical ledger. So this combination of incredible financial power and these constant intense regulatory battles, it brings us to maybe the most difficult part of the Apple story, the ethical and environmental foundations of how they actually operate and make their products globally.
Right. Let's start with the environmental side. Apple often gets praise, or at least attention, for its ambitious environmental goals, carbon neutrality, things like that. But now there's a new EU law that's forcing them to change how they even talk about their environmental work.
Yeah, this is the carbon neutrality ban. It's actually a pretty big deal for their marketing and communication strategy. By September 2026, a new EU law will literally ban companies from using terms like carbon neutral or climate neutral on their packaging or in ads.
Why? What's the reasoning behind banning those terms?
The core argument from critics, and now codified in EU law, is that these terms can be misleading for consumers.
Misleading how?
Because consumers might see carbon neutral and assume the company has completely eliminated all the emissions from making that product. But often that's not the case. Instead, companies rely heavily on buying carbon offsets.
Like funding projects that plant trees or protect forests somewhere else?
Exactly. They're balancing out their emissions by investing elsewhere, rather than eliminating the emissions at the source. The EU feels this isn't transparent enough for consumers.
And Apple's response is just to stop using the label globally, even outside the EU.
That appears to be the plan, yeah. To avoid confusion and maintain consistency, they're phasing out the label worldwide. Now, Apple argues they're losing a valuable tool to communicate genuinely positive efforts.
But the criticism is pretty fundamental.
It is. Now, despite losing the label, Apple says it's still pushing hard on its actual emissions reduction goals. They aim for a 75% cut in emissions across their entire value chain by 2030.
75% is ambitious.
Very ambitious. And 90% by the middle of the century. They point to progress they're making by using more recycled materials, things like recycled gold in circuit boards, recycled cobalt in batteries, recycled rare earth elements, and they're pioneering new manufacturing methods too, like something called impact extrusion for making the aluminum cases for Mac Minis, which apparently drastically cuts the carbon footprint of producing that aluminum.
Okay, but the core issue with the offsets remains, right? Are those offset projects actually delivering real, verifiable carbon reductions? Or is it just, greenwashing?
That is the absolute heart of the criticism. And it's even led to lawsuits against Apple and other companies using offsets.
Lawsuits arguing what?
Arguing that the math on offsets doesn't always add up. Critics say, for example, that funding a project to restore a forest, while good, isn't truly equivalent to not burning fossil fuels in your factory right now. The climate impact isn't the same or isn't guaranteed. Some lawsuits have alleged that specific offset projects Apple supported failed to deliver genuine carbon reductions.
And the concern there is that relying too much on offsets might make companies less motivated to do the harder work of changing their own core, energy-intensive manufacturing processes.
That's exactly the concern. If you can just buy your way to neutrality, does it reduce the pressure to make fundamental changes?
Okay, let's move from the environment to inside Apple's own corporate walls. That famous culture of secrecy. It's led to some really troubling descriptions from employees, hasn't it? Especially around internal surveillance and control.
Yeah, the internal culture has been described pretty harshly by some employees in reports. Terms like a culture of fear and oppression have been used. One employee actually told the New York Times, quote, "Never have I met people more terrified to speak out against their employer."
Wow. Terrified. Why? What's the core issue?
The problem seems to be that Apple's intense secrecy policies, which are understandable for protecting unreleased products, often get conflated with suppressing legally protected speech.
Well, are they talking about wages or working conditions?
Exactly. Employees report feeling that any leak, even if it's about workplace issues, not product secrets, is treated as a major security breach, potentially costing them their job.
And they have a dedicated team for hunting down leaks, right? With a rather ominous nickname.
They do. It's officially called the Worldwide Loyalty Team.
Huh.
But employees reportedly nicknamed it the Gestapo.
The Gestapo. That's chilling.
It certainly suggests a climate of fear. And this team is known for using pretty aggressive investigative tactics. Sources document past incidents like Apple getting a search warrant served on a Gizmodo blogger who got hold of a lost iPhone prototype years ago.
I remember that.
And even more disturbingly, there were allegations that Apple investigators actually posed as San Francisco police officers during a different hunt for a lost prototype, presumably to intimidate people into talking.
Posing as police officers, that's serious.
Very serious, if true.
And the sources also talk about deep concerns among employees about just constant monitoring and surveillance, especially among retail staff trying to unionize.
Yeah, the surveillance fears seem quite real. Corporate employees are apparently told explicitly they have no expectation of privacy if they use personal devices for any work purposes.
No expectation of privacy on your own phone.
If used for work, yes. And retail employees who were involved in union organizing efforts reportedly started using Android phones instead of their work-issued iPhones, specifically because they feared Apple was using monitoring software on the employee devices.
Using burner phones, essentially, to organize.
It seems that way. And it's not just paranoia. In late 2024, the National Labor Relations Board, the NLRB, actually charged Apple with forcing employees into signing what the NLRB called illegal employment contracts. And they also charged Apple with illegally restricting how employees could use social media and internal Slack channels to discuss working conditions.